Well, global growth fears found their way back into the market today. And some of the reasons for today's triple-digit decline are all too familiar. A fall in oil prices, a drop in Chinese manufacturing activity, and signs that growth in the Eurozone may be weaker than previously thought. That pressured stocks. The Dow Jones Industrial Average dropped 140 points to 17,750. NASDAQ fell 54, and the S&P 500 was off 18. And as Bob Pisani points out, the very things that have been driving the market higher for nearly 3 months seem to be starting to shift.
Stocks were down today as three key tenets of the recent market rally all reversed a bit. First, there's the China problem. China's been stable recently, but the economic data has been choppy and kind of hard to read. Overnight, the manufacturing numbers were weaker than expected, and that is predictably causing commodities and commodity stocks to weaken around the world. Second problem is the dollar. It's been notably weak this quarter, and that's also been a big help to commodity stocks and big U.S.-based exporters. But some are starting to question whether the dollar's fall is now over. Indeed, the dollar staged a big reversal today. The third problem is oil. We know that it's off the February low of roughly $26, but it's dropped about 5% in the last few days as it's become clear that production is still very high among the biggest players around the world, and that's unlikely to come down much. So is all this the start of something? Well, if it is, it's pretty modest so far. As with all the market leaders, energy, materials, and industrials are now susceptible should there be even a modest pullback. That's why they're down a lot today. And so far, modest is all we're seeing in the broader market. Look at it this way. The S&P 500 was at 2,100 at the end of April. So we're only 2% off of that. So far, this is a modest garden variety pullback, not even a correction, at least so far. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.